Happy Easter weekend, everybody. Today we'll be going over the week 45 portfolio update since I started living out of my Robinhood Brokerage account and investing 100% of my paycheck. I'll go into all the details, breaking down my performance this week, dividends received, any portfolio thoughts for the week, and then also the finance video of the week. It's been a surprising green week in the market. I was kind of starting to forget how that felt like, honestly, with all the red we've been seeing the last month or so. But yeah, still, I don't quite trust it. I feel like it's kind of all hinging on the news that the Middle East conflict could be coming to an end potentially with negotiations and whatnot. But personally, I'm kind of doubtful it will end anytime soon. So I feel like there'll be a lot more red and choppiness to come. I think we're not over the worst of it yet. Don't know for sure, but just a feeling. But yeah, as usual, you'll get radical transparency on my channel, whether the market is up or down. You'll see all my real numbers and see exactly how much skin I have in the game for any given position. If you appreciate all the transparency, give a like and subscribe. As usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial investment or tax advice. Simply sharing my personal investing journey and documenting my own results. And with that said, so as a refresher for anyone that's new to the channel, this is the monthly flowchart I use to invest 100% of my income. And this is kind of the layoff edition before I start my new job in a couple weeks. But yeah, previously I'd invest 10.8K a month, but now I'll be $1,152 every week with my unemployment income until I start my new job, as I mentioned. I invested normally into growth and high yield ETFs, but with the layoff, I'll be focusing more on safer high yield ETFs for now to kind of keep my monthly cash flow going. So things like SPY-I, QQI, T-SPY, TDAC, XPay, MLPI, things like that. I've stopped using a traditional bank account to live entirely out of my Robinhood Brokerage account. I use cheap margin of 4.5% to pay all my bills and bridge the gap between my monthly dividends and my monthly bills. The goal is to ideally never sell a share to take money out of the account, apart from when I need to rebalance from funds. And yeah, I want to forever compound both my growth and high yield assets and never interrupt the compounding, essentially, to eventually have my monthly dividends exceed my monthly expenses. If you want an in-depth breakdown of the old chart that I was using, which will be kind of similar to that once I start the new job, check out the link at the top right. Yeah, let's just dive in. So if we pop over to Robinhood to check out the numbers. So yeah, you can see this is my live portfolio with all my positions, nothing hidden here. Set up on a good day on Thursday, which was the last trading day since Friday. The market was closed for Easter, but was up $463 or 0.31% and a little bit of green in the overnight there. But overall, it was a nice green week. So it was up 5.92% or 8.4K on the month. Still down, of course, given all the choppiness that we've had from the war volatility, but down 10K or 6.28%. On the 3 months, still down quite a bit, 11.45% or 19.4K. Year to date, still down quite a bit as well. 9.8% or 16.3K. And then if we go to all, since I transferred to Robinhood in July last year, down 5.79% or 9.2K. So a green week, but still overall in the red, right? And like I said, I'll be showing stuff whether it's green or red, and just to be fully transparent. So yeah, that's how it's looking in the live portfolio. If we hop over to my sheet to kind of just see the numbers a little bit more in detail here. So if we check the top line numbers here, so if we add up all my positions, I basically have a gross portfolio value of 317.2K. I'm using 166.5K of margin, so quite a bit, which gives me a net portfolio value of the 150.6K, right? And then if we pop over here to the total returns column and the unrealized gains column, I like tracking both to kind of just see like where things are at. And yeah, so if we go for the total profit, so this is similar to like what you'd see in Snowball, right? This is their total profit here. Not gonna be quite the same number because I have more history on my sheet here compared to Snowball, but the total profit, if you factor in realized gains, dividends, unrealized gains, and the margin, I'm sitting at 32.5K gain overall, or 21.59% gain. If we go into the unrealized side of things, so that includes both like the unrealized, right? Like here, plus some of the realized gains that I have here, and not factoring the dividends, I'm actually down minus 29.1K or minus 0.34%, right? So quite a big difference there. Like you can see how big of a difference the dividends make. Yeah, and then as far as the individual positions, we'll actually kind of look at this more in Snowball. I think it gives a little bit more of an accurate picture there as far as like what's up or down, and we'll check that in a bit. But yeah, how stuff splits between my growth and high yield income. So 167K of that is in growth, so 52% of the portfolio, and then 150.1K of all that, of the 317, is 47% of the portfolio. So almost getting close to a 50% It's 50-50 split between growth and high yield income. High yield income will come up a lot more since I'll just be focusing on that, as I've mentioned before, going forward with my new job and my new paychecks. If we check on the margin health here, so yeah, as I mentioned, the gross portfolio value, the margin used that we talked about, net portfolio value. If we take the gross portfolio value and apply the blended margin maintenance across all my positions, everything is 25% now. That gives you a margin maintenance dollar of 79,000.3K, right? So basically my portfolio would have to drop to this value to hit a margin call. So I'm always kind of keeping this number in mind, right? And then if you minus out your margin maintenance to your net portfolio value, you get your margin buffer here. So my margin buffer is sitting at 71.3K, which is about 47.35% as far as a drop from my net portfolio value, which, you know, if you see that makes you feel a little bit safer than you are. That's what Robinhood shows in their calculations here. And personally, I'm not a big fan of this because like that just makes it look like you're safer, right? But really, a 47% drop would actually be the equivalent of a 22.48% drop of the gross portfolio value. So that's why I kind of calculate both numbers, but I mostly go off the gross value here. So this gross portfolio value, right, drops 22%. That's the equivalent of a 71.3K drop. So that's the equivalent of a 47% drop. So it's very important to keep this gross buffer in mind, sorry. Because this just kind of makes you feel safer than you are. Because you're like, oh, a 47% drop, that won't happen, right? But not quite. Because if you're using margin, yeah, that gets amplified depending on how much leverage you have, right? And this is a new little field I added here, the leverage multiple. So really you kind of take this by taking your gross portfolio value and dividing it by your net portfolio value. And yeah, you can kind of get your multiple there. So this kind of applies to like roughly, for example, like the day's gains here, right? Like if you do times 2.1, that'll be roughly like your day's gain after margin, right? So kind of amplified a little over two times. So yeah, and that makes sense with your equity as well too. So my equity is sitting at 47.48%, right? And then as far as my buying power, if you take your margin total and minus out your margin used, that's a 74.3K of margin buying power. If you half that amount, that's basically your cash available for withdrawal, so 37.1K. So this is cold hard cash I could take out of the portfolio if I wanted, right? But yeah, I'm not. I like kind of keeping this buffer here and kind of keeping this safe. This is almost in a way my super emergency fund, right? Since I don't carry one, or at least one of them. You know, there's a HELOC, there's personal line of credit, a bunch of other stuff in the background there. But yeah, I prefer to kind of stay fully invested and stay fully in the market and kind of have all my money working for me. And as far as like the monthly dividend, we're sitting at $4,557 roughly a month. This is just an estimate, right? Just because distributions fluctuate from week to week. But yeah, that gives me roughly a 36.42% distribution yield if you factor it in on just the high yield income assets that I have, right? If you factor it in on my full portfolio value, my taxable portfolio yield is more like 17.95%. So yeah, that's where I'm at as far as like the top line numbers. And yeah, and also for my interest right now that I'm paying on like the 166K of margin, right? I'm basically paying $620 a month to make 4.5K. So pretty good spread overall, I'd say, given that income, right? And yeah, so if we pop over to Snowball to kind of take a deeper dive on everything. So if we take a look at the categories here, so this is more broken down than what you see in the sheet here, just to kind of fully grasp where the different parts of the portfolio are at. So for the ultra yielders, so anything that's yielding 30% plus, so that's still in the red, of course. So down 8.45% or 8.3K. So yeah, that's kind of being led by basically YMAX, Ulti, and BTCI. Chippy is kind of starting to climb out of the red, which is nice. But yeah, you can kind of see how like the capital gains are offset by the dividends received, but not quite enough, right? So kind of expect YMAX, Ulti, and BTCI to kind of stay in the red unless Bitcoin has a big rally, right? Maybe this can kind of get out of it, but it will have to be a pretty big one. Chippy, I expect this is the one in here that can kind of recover, right? And it's kind of making its way out of the capital gains red. So looking forward to that. High yield anchor is just holding on to green. It's definitely negative in the capital gains now, as you can kind of see here. But all the dividends I've received are kind of offsetting that and kind of keeping it in the green in total return. So these are yielders that are in the 10 to 20% range, right? So XPay, which is 20%, T-SPY, which is 14%, TDAX, 17% yield, SPY is like a 12% yield, QQQI is like a 14% yield, and MLPI is like a 15% yield. So XPay and MLPI kind of staying in the green here at 18% for XPay and 4.2% on MLPI. And T-SPY, TDAX, SPY, QQQI all got hit by the volatility from the war. So yeah, those are in the red. But as I kind of keep investing in these and as things bounce back, I expect these to kind of eventually get back into the green. Yeah, so these are all my anchors combined together. As far as my little hedge, as far as doing some long short equities with OR and CLSC, those are doing good. CLSC is back in the green. OR is kind of slowly climbing out of the red here, and gold holding up, staying in the green here between capital gains and dividends, despite its drop the other week. So yeah, that buying the dip on this was nice the other week. Is definitely holding up nicely. And yeah, almost back in the green here. So definitely this I'm hoping as a hedge is to like maybe slowly grow, but kind of mostly stay stable. Like I just want this to kind of be like a stable-ish core of the portfolio that's like a lot less volatile than the rest, right? And then for my dividend growth and growth anchor ETFs, VU, VGT, SPMO, SCHD, QQQM, all holding up really well. SPMO and VGT obviously are newer positions and got hit hard by the war volatility, but these are kind of climbing back out of the red. So long term, like I just expect this to be very green, right? Like SCHD, QQQM, and VU are some of my longest held ones, and these are doing good. And yeah, that's all the categories there. If we pop over to the growth side of things to check the charts for the week, you can kind of see that I was ahead of the S&P 500 this week, which is nice, by 3%, so 4.4K. If we look at that and the S&P over here, just isolated to the week, right? So kind of started the week down, but then had like a nice rise up there. So you can kind of see like the margin amplification working well on the green side as well too. So I got hit harder on the red day here, but as we had successive green days, you kind of just build on that, and kind of helped me outperform the S&P 500 by like almost double. So I was up 9.3K this week, or 6.59%, and the S&P was up 3.42%, or 4.8K. So I think this basically kind of does it as if you were like, instead of your portfolio, you were investing the S&P 500 in the same time. So yeah, to kind of make it a nice comparison there. But yeah, of course, if we check year to date, I'm definitely still trailing it, right? You can kind of see like the beginning of the year, as I've mentioned before, I was kind of outperforming, and then as we've kind of gotten just like bad downturn and kind of just down days successively, that's been kind of weighing down on the portfolio, right? And especially with the margin amplification. So yeah, kind of bounce back up here, but yeah, really to kind of outperform the S&P in total return, I'd have to have like a lot of successive green days. So we'll see how it all goes. I'm not confident that we're gonna get green weeks again in the near term. So we'll see. I think it's just very, very volatile with the situation in the Middle East. So we'll take it 1 week at a time. And yeah, and if we check out the heat map here, so this is kind of nice to see again. Like it feels like this is the first time I've seen green in the last like 2 months, it feels like. Yeah, I think the last time we saw green was like in the middle of January, right? So yeah, nice to see this like a mostly green chart. Like the only one that's red is actually just MLPI from kind of like the news that the war might be winding down, but I'm kind of doubtful again. But yeah, everything else was green. XPay's green, VU, so all the S&P related ETFs were holding up well together. T-SPY kind of lagging behind, surprisingly. So yeah, kind of interesting to see. So it didn't capture as much as the bounce back, but SPY did a good job of it, and XPay actually matched it pretty well. Yeah. If we look at QQQM, that was up 4%. TDAC kind of trailing it as well too, right? Same for QQQI. So seems like they're kind of doing something there that's kind of making them lag a bit more behind between SPY and QQQI as far as the bounces, right? I never fully expect them to get the full bounce back, but yeah, just interesting to see the difference between them. And honestly, that's why I kind of invest on the different income strategies on the same index, right? Because they're all kind of approaching it differently. So yeah, always nice to kind of keep that in mind. And yeah, and then Alti here has actually just got close to matching SPY, and yeah, up 3.3% between its capital gains and the dividends received, which is nice. YMAX as well. And yeah, Chippy had a nice bounce back as well, kind of in line with tech as well. So yeah, nice green week overall. VGT up 4.7%. So nice green week. This will be nice to put in the thumbnail this week. It's just been red the last few weeks, right? If you've been paying attention to my heat map in the thumbnails. But yeah, if we pop, and year to date too, just to kind of get a quick view of that again. SCHD just holding strong this year with the rotation into value compared to tech, right? But since I'm so tech heavy, everything else in tech related is in the red between VU, QQQ. You can kind of see that Alti here is actually holding up better than VU with in total returns, which is kind of nice to see. So yeah, it's strategy change. Honestly, I've been kind of impressed by it year to date, at least ever since their November strategy change. YMAX kind of not doing great though. This was interesting because like even like it had a recent rebalance in the middle of March, and I wasn't a fan because it seems like they went heavy into crypto for some reason in the middle of March with their rebalance, and got rid of a lot of their more stable stuff, like even like Chippy and things like that. So a bit dubious of that. I'm kind of starting to be a bit reticent of YMAX and how often they're rebalancing with this new strategy change, but we're going to keep an eye on that. But yeah, Alti comparatively actually holding up pretty well compared to YMAX, which is kind of crazy to see. That's how it's looking year to date. But yeah, on the week, very green this week, which is nice. As far as the dividend calendar, let's take a look at that. So the beginning of the week just had like SEHD's dividend, of $405, which I reinvested. Same for VU of $33. I basically reinvested that into SPMO, if I'm not mistaken, that week, or potentially VGT. I'm like not quite remembering, but yeah, one of those two, because they were down on the week, on the month really. And then we got our monthly dividend for T-SPY of $50 at 15% yield. Had Chippy's dividend at $255 at 38% yield. Alti's dividend at $193 at 63% yield. And YMAX at $136 at 58.9% yield. So yeah, good week overall. Just a little over 1,000, right? This week, which is nice. In fact, between March and the April dividends. And yeah, for this month, it's looking like we might be sitting at 4.3K of income. So we'll see how that pans out. But yeah, I'll be investing a lot more this month between my tax refund and my paychecks I'll be coming in. So those will be kind of going into the portfolio and boosting up the income this month, right? If we go over to the dividends tab here to kind of take a look at the yield on cost here. So again, Alti, given the capital that I have invested and its average cost per share, that's still really high compared to the drop, right? The yield on cost on my capital is actually 39% instead of like the weekly 63% yield. Given how much I've invested into it. And then YMAX is probably closer to 34% instead of the 58% I got this week. And then BTCI down to 16.9% instead of the 28% I got I'm getting this month. But all the other ones, Chippy, XPay, TDAC, T-SPY, QQQI, MLPI, IAUI, SPY-I, all holding up well, right? And also, yeah, just as a reminder, my portfolio here on Snowball is completely accessible for free in the description below. So check it out if you want to poke at these same numbers yourself, right? Yeah, this is fully there and transparent for you to poke through and look at. Love sharing my numbers transparently with everybody. And yeah, and that's the numbers. As far as updates related to the portfolio, yeah, I finally got my tax refund on Friday. So if we pop over here, you can see my cash, that new secondary brokerage account. I transferred it over there. So $4,292 that I got as a tax refund, which is nice. So yeah, I'm excited to get that invested on Monday, on the 6th. So look out for that video on that day. But yeah, I should be investing that plus my weekly unemployment check. So it's my before last one, right? Of $1,152. So it'll be a nice chunk to invest on Monday there. And yeah, excited. Just unfortunate that it landed on Friday after market hours and the market was closed anyways that day. But yeah, excited to get that invested. Honestly, like, yeah, fair warning too, because like if we pop over to Mirror, I have a couple shots saved here. Yeah, just fair warning for tech, right? So personally, I'm like probably over-indexed. I am over-indexed in tech, right? And yeah, just a reminder that it's only really down like, yeah. This was an older shot, 5.7% the other day, but like year to date after I think this Thursday, we're down on tech 4.66% year to date. So in the grand scheme of things, like we're down pretty little considering, right? All things considered. So yeah, I mean, no one can say for sure how things will play out with like the conflict in the Middle East, but I don't know. I have a feeling that this year might end up with how bad 2022's tech downturn was, right? So as a reminder, in 2022, this is a screenshot from Morningstar's QQQ page. You can kind of check it out here if you want. But on 2022, we were down 32.5% on tech, as a reminder. So it was a big down year on tech. And actually, this was the year that I started income investing because, yeah, I kind of wanted to cushion the blow of kind of how bad tech was going down that year. And yeah, so really, this year to date, we are just down 4.66%. So that's a good reminder. So there's potentially quite a bit of ways to go, right? Like if my gross portfolio were to go down 27%, I'd definitely be in trouble with a margin call, given my current margin buffer. So like if we go back to this, right? So if we go down 27%, like this is not going to save me, right? Because like if we look at this, my gross portfolio value. So if this value were to go down 27%, I'd be like way beyond the margin call. And then that's, if you roughly doubled that, I'd be down like, 52%. So way above even the margin buffer here, right? If you amplify that and apply the leverage multiple here. So that definitely got me thinking, honestly, as I was kind of being reminded of that. We were basically going back and forth on that in the Discord, honestly, this week, and people were kind of sharing their year-to-date performance. And this is why I shared this as well too. This was just a good reminder, just like the margin amplification, right? So in the Robinhood app, you can't get this on desktop, unfortunately, but if you press on the stock and ETFs button, you can kind of get your basically gross portfolio value and the performance there. So like this was on Thursday, I believe. So I'm down 4.82% year to date technically on my gross portfolio value, so 16K. But if you look at my year-to-date performance on the net value, right, with the margin amplification factored in, like I'm actually down 10.49% or 17.5K. So quite a bit of difference there, right? So this is kind of basically like almost applying margin multiple, right? So it's like if you take the 3,600, 674 divided by 149, 489, that's roughly this multiple, right? Kind of pretty much matches what you see here. So that's super important to kind of keep in mind, right? So any day's gain will be basically multiplied by the 2.11, whether it's up or down, right? So very, very, very important to kind of keep in mind, right? So for my portfolio, hopefully as I kind of keep injecting money into the portfolio through my paychecks every week and just really growing this gross balance, right? I can hopefully stay away from that margin call. But it did get me thinking, like, we were kind of going back and forth on all this in our Discord, right? And people were sharing how much they were down year to date. So some people were doing good, like Marv here, doing only down 0.9%, which is amazing. But one of our more impressive ones was actually Arcurus over here. He's up 37% year to date, which is amazing. He kind of shared some of his positions here that he has, right? WEEI, MLPI, Blocks, KCOP, Gold, Silver, Walmart, Weapon, NukeX from X Funds, ASGI, that one I'm not too sure of, SPCI, I'd have to look into these two. But he's been doing amazing, which is super impressive. But it definitely got me thinking that I need to kind of think of like, I was researching 2022 essentially, and just kind of seeing what was up and down that year. So tech obviously got hit hard, right? But when I looked at things like commodities for like gold held up really nicely. Oil was up way up because the price of the barrel went up that year. Managed futures did good. Funds like SCHD held up. They didn't go down as much, right? I think SCHD was down like 5% with total returns factored in instead of the 32%. So honestly, in the near term, I might maybe be kind of going into those a bit more. I'm kind of researching, honestly, WEEI that Arcurus is in a bit more as far as the oil stuff. MLPI I'm already in. JG3 brought up NDIV too, which seems interesting, which has a 10% yield as well and kind of focuses on energy and natural resources, equities. So definitely be ones I'll be looking into and potentially that I'll be investing in on Monday. We'll see. Still need to research some this weekend. But I think overall, I kind of want to cushion things overall, right? So like, I'm obviously very over-indexed in tech, right? When you look at all my positions, right? VGT is tech, QQQM is tech, VU, SPMO, tech, pretty heavy in tech. This is all tech, right? And then it's basically just MLPI, IAUI, BTCI, SCHD, or CLSC that's not like fully tech invested, right? So I'll still be obviously investing in these still, but I think I do want to build up a little bit more of kind of like stuff outside of tech just to kind of help cushion things in years like potentially this year in case there is a big tech downturn, right? I don't want tech to just kind of fully take down my portfolio with it, right? So I'll kind of be looking into that in the near term, but I'll still be investing in some of these more index plays like QQQI, TDAC, and all that. But just something I'm considering and that I'm thinking about this week, given some back and forth conversations I've had. But despite all that though, despite the volatility in the red, like I'm still going to be DCAing every week into the market, whether it's up or down. Of course, I'll be even more excited on down days for sure, but I'll just kind of keep to the strategy and keep investing, whether the market's doing good or not, right? I'll be, of course, like paying closer attention to my equity once I start my new job as well too, and make sure to kind of get this back up over 50%. And as a reminder, if it ever dips sustainably under 50% for like a sustained period of time, that's a case where maybe my paycheck that week, I might just deposit to cash and margin to kind of get the margin used down just to really boost up the equity, right? So like, for example, like if I like put in like 2,400 that week, yeah, you can kind of see how the equity just bumps up by 1%, right? Or if I put like 5,400, that puts it back up. So that's what I might be doing in cases where my equity is kind of dropping quite a bit, under 50%. That's just a good reminder there of kind of where tech is at and margin amplification and how to keep that in mind. Because yeah, very important, especially when you're doing margins. And that's why like I kind of obsessively look at my margin health every week just to monitor that very closely. As far as the finance video of the week, I wanted to share the covered call guy. So I've been following his channel for several months. Honestly, like his channel here. He kind of formats stuff in like slides. He's been a fun one to follow. He invests in a lot of like high yield income ETFs like I do and like a bunch of us do. And yeah, he has the same goal of replacing his salary and creating kind of that second income stream in the meantime to kind of cushion things against like how stuff is going, right? Yeah, a lot of good stuff that he posts. It's like pretty much just like a cool PowerPoint that he does multiple days a week, right? So yeah, he's very thorough in his research, which I appreciate. And yeah, love watching his videos every week. So definitely check it out if you're into high yield income like we are and want to replace your salary. Definitely a channel worth checking out. But yeah, that's the video. And also, yeah, the link for his video will be at the top right there and then also down below as well. But yeah, if you want to support the channel out of YouTube, in and out of YouTube, there's a bunch of different ways. You can do it on Blossom Social. You can find me on there. You can see all my trades, all my posts. Snowball, like I mentioned, this is all free. The link is in the description below. So yeah, all my real numbers, all my total profits, you can kind of see all that and poke at it yourself. And then also I do have the membership that I launched on YouTube. So this is similar to the Patreon one. Just little perks here. No paywalled content because yeah, just want to keep everything free and open for everybody. But you do get emojis in the comments to rep the channel. Yeah, you have access to private Discord channels within the public Discord that's free, where you have like more direct access to me if you want, and other supporters as well. And yeah, just overall satisfaction of kind of keeping the channel going. If you're interested, you can either do that on YouTube or Patreon. Some similar membership here. And yeah, on Patreon, I have my backlog of stuff as usual, just in case there's any more shenanigans on YouTube. And yeah, and then of course the Discord, like I was showing, a lot of good back and forth conversation with everybody here. Yeah, post all my trade alerts here. A lot of cashback buys this week, as I was mentioning in the video. I had a little $1.07 BTCI buy just from grooming my dog this week and getting cash back out of the groomers. So yeah, love Robinhood Gold's 3% cash back, and that you can kind of send it as soon as you use it, which is nice. But yeah, that's the video this week. Look forward to the Monday video where I invest my full paycheck, unemployment paycheck, and then also my tax refund. So I'll catch you then. If you appreciate all the transparency from the channel week in, week out, please give a like and subscribe. Hit the bell notification to be notified about future videos. And I'll catch you in the next one. Peace.